New spikes in COVID cases in the USA and Europe, facing the economy uncertainty, and yet soybean scarcity in Brazil and possible USDA ending stocks changes. Right here again with Mike Zuzolo, President of Global Commodity Analytics, on our section all about commodities in Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, we start from this. Sometimes we start with the grains, with the specific grains, and then we go to the overall economy. But today, let's start with the overall economy. So we have some positive data from China, but there are huge spikes in COVID cases and lockdowns in Europe and now in the USA with very significant COVID cases. How do you assess that in relation to the farm commodities?
Well, I think, we have talked a lot about how the macro and the micro come together in today's world of trading and asset management, Luis. And I think unfortunately, the expectation that the dollar could become a safe haven asset again heading into the US election, coupled with the COVID issue that you're talking about, and then add on top of that no US stimulus to keep the reflation trade going here in the United States, all that adds up to all roads lead to buying the dollar back. And we've now seen, I think you and I talked about this maybe the last time we spoke, how the negative relationship between the dollar and the crude oil really needs to be focused in on because of the way the commodity index traders trade, and the idea that if the energy markets go lower, it will pull down everything or try to pull down everything. And I think that's exactly what's happening right now is those three factors, those macro factors, have the nervousness of the trade back. They're dumping positions with the idea that they can always buy it back after the US election, and to wait and see how bad the hospitalizations are in the European areas and the United States. And we have to keep in mind one other thing that I don't think many people are talking about is everybody now is talking about how China is on its own, how it's doing so well, how it's relying upon domestic demand. I don't buy that because most of the information that I get from the Bank of International Settlements and from the IMF continues to show that China really still relies upon the US and Europe for their imports, in terms of US and European Union imports that China ships out. So if Europe and the US get sick again, it will hurt China, I believe. And so we're in this situation now in this murky time period, in this nervous time period, where the commodities are caught up in that macro related risk off trade and that dollar safe haven buying. And I'll put one other thing out there for you before your next question, and that is, I think we're at a critical point here because these macro issues are coming right at the end of October, right ahead of the US election, and the chart technicals are looking very, very vulnerable right now for corn, beans, and wheat. And I say that from a standpoint of the weekly charts, the momentum indicators, the trendline supports that have been in these charts for several months now, or at least multiple weeks now. These are starting to be tested. And so it's, I think, real critical as we close out the end of the month that we hold some of these technical lines in the sand and we don't encourage more momentum selling when we come back in the 1st of November. So that's probably the biggest thing that I'm watching here in the short term as to whether I lift puts that I bought and start to buy back some of my sales, or whether I just sit pat and wait for this all to unfold after the election.
Before we jump into specific commodities like soybeans, And corn, I think it's an interesting viewpoint to assess other commodities like cotton. I saw a very interesting analysis from an economist from the University of Tennessee, just saying that if the U.S. economy doesn't run well, there will be problems with cotton prices because cotton goes to China, China makes the clothes, and then the clothes are sent back to the United States.
Yeah, and I think this is where the livestock and the meat markets are a definite canary in the coal mine to me, because you talk about textiles and you talk about restaurants, and they are directly linked to the downside of COVID. We saw that last spring, and I would throw energy in there as well. I mean, we cannot forget that crude oil in the New York market went negative $40.32 a barrel for an hour or so when the COVID was at its worst in terms of the market sentiment. And that now that we have gone negative in commodity prices, this is not a forecast, but it is possible now that we can go negative in the futures markets because the exchanges have allowed it and the funds have driven it to those points in terms of the crude oil market. So I think this is where I've always wanted to be a hedger as we go into the fourth quarter of 2020. And then I feel a lot better about 2021 once we get past the election and get a vaccine in place with COVID. And I think Thursday was a really crucial day for the agriculture markets and the macro markets. We saw a third quarter GDP number for the United States of 33%, above the highest trade guess, or above the average trade guess, I should say, of about 31%. So that should make some of the demand bears and nervous people in the market maybe sit back and wonder whether we're not better off than we thought we were. And even more importantly, on the micro side, we sold, I think it was by the end of Thursday's trade, between the 88 million bushels of corn for the weekly export sales and then another 56 million individual sale Thursday morning to Mexico. Luis, we sold almost 145 million bushels of corn in a week and one day here in the United States. And so China was the number one buyer of beef this past week. They were in for our wheat again. Brazil was in for our wheat. Brazil was in for our cotton. We've got a real demand play still going on here. And it goes back to what you just said when it comes to China. China is the big guy on the block when it comes to the commodity demand. And if they're standing on the corner buying commodities, that wakes up Mexico. It wakes up South Korea. It wakes up Brazil. It wakes up the European Union. It wakes up the Middle Eastern countries. And so we're starting to see this momentum gain where there's this positive feedback loop that if the weather stays bad in the South American corn and bean and wheat belts, and bad in the United States wheat belt, and bad in the Russian wheat belt, all of a sudden the end users say, I'm not going to have the supply I thought I would have, so I'm going to buy even more and buy ahead. And that feeds back into that positive feedback loop. And I think that's where we're at right when this macro starts to hit us and this sell-off by the funds is hitting us. So there's a battle line that's being drawn right now. And again, I go back to those charts as a real important point.
Yes, Mike, you spoke before that China will probably wait and see about the election. But at the same time, I think they have no other option than to buy corn and soybeans because Brazil doesn't have any soybeans to sell this year anymore, and the scarcity within the country is very serious. It's so severe that laying hens are being discarded. A lot of meat processing plants are suffering financial stress, and also the soybean processors are having financial stress in Brazil.
Yeah, and I think that's a valid point. I would go back to the idea, though, that the qualifiers that I put out if China were going to not buy as much or cancel was that if President Trump were leading in the polls, that they would try and damage him as much as possible in farm country by potentially canceling. But that would not be a play even if he was leading, if we did have bad weather in South America. So I think, again, that positive feedback loop is working where even China is nervous to do anything in terms of canceling product. I did see some soy meal cancellations on the weekly export sales by China, though, on Thursday morning. So I think they're out there thinking about canceling. Luis, it doesn't make sense to me right now, given a normal production number in Brazil and Argentina and the United States, why they would buy 51% more beans from Brazil in the month of September and then buy what they're buying from us. Where are these soybeans going? They haven't repopulated their hog herd to the level that they were at in 2019. So I still think they're buying extra. I still think the soybeans are the weakest suit of cards, as we would say in card playing. I still like the wheat the most from a standpoint of the overall trend, especially given our weather patterns that we've established and also the way the dollar and the ruble have been acting. And, as far as cash grain, I still like corn by far the most in terms of what's the best storable cash commodity out there. I will throw one other thing out to you. I am continuing to hear that Argentina and their producers are sitting on a lot of corn and a lot of beans, especially soybeans at this point, because they're using it as a dollar inflation hedge. I looked at the numbers, and the world ending stocks of soybeans are around 90 million metric tons on USDA's last report. Argentina is 27 million of that 90 million extra 90 million metric ton number. So I wonder if the dollar starts to go back down again, and the peso starts to gain a little bit, whether we won't see Argentine farmers sell a little bit more aggressively. So I think there are some supplies out there. They're locked up right now. Why? Because of the macro and the currency factors, not supply demand.
Yes, it's up to the Argentinian government to recognize the real value of the peso.
Now, one thing I wanted to ask you on Brazil, I saw where Bolsonaro was talking about purchasing around 400,000 tons of U.S. rice, and we know they're in for wheat because of the export sales, but I can't get confirmation that they have bought any beans yet, mainly because of the GMO restrictions. There's like 9 varieties out there, at least 9 varieties of U.S. soybeans and corn that Brazil will not take. So do you still think Brazil will take on some U.S. soybeans?
Well, the thing is that they took too long to eliminate the tariffs, so I don't think there is much time to end a contract within this year. But wow, the scarcity is really serious in Brazil, and yet this is worse if we look forward, because I talked today with a lot of farmers from the state of Parana, and they are seeing a drought that they are saying that was something never seen before.
I have been watching the accumulated precipitation versus normal in Parana and surrounding areas, and it actually gets into, I think, Entre Rios into Argentina as well. They're looking at 25 to 50% of normal precipitation over the last 60 or 90 days. That's a real good point.
Yes, not only the second corn crop would be delayed, but also the soybean yields would be a lot lower if the rains don't fall.
So that brings us back to the market can continue to go higher, even if the dollar is going up in a trend if the wheat catches again, because I think the soybeans, once again, this past 2 weeks showed us that it can go higher, but it won't stay higher if the wheat and the corn aren't supporting it. And I think that's a real valuable tool for the farmer and the rancher out there, about the rancher especially, whether he should be locking in some of his feed needs starting in 2021. I'm right on the cusp of recommending that based upon what you're saying right now.
Yes, and what are you seeing at the end of the U.S. Soybean harvest?
Well, I think the general mindset was that the beans came off better than the corn, but there's still a lot of corn to be shelled and harvested at this point. The corn on corn acres are still being hit with a lower yield from what I can tell in most areas. So I would stand by, I think what we talked about last time, where the USDA has US soybean production below 2018 levels. I think the corn needs to be back below or at least at 2018 levels as well. And USDA hasn't done that yet. So that's probably the biggest two things I'll be watching when it comes to the next WASDE report, along with what they do with the global wheat ending stocks, because we have started to hear now where even the USDA ag attaché put out a fresh report, and he took Argentina's wheat production down to 17.4 million tons versus I think 19 million is where the USDA official number is. So that wheat crop in Argentina continues to shrink. And I think the European Union wheat crop is going to continue to shrink. And obviously here in Kansas, we have a good to excellent rating in wheat right now, Luis, of 29%. Last year at this time, it was 55%. And we're getting cold enough now, we're going into dormancy. So we better get some rain and some snow very, very soon, or it's going to be a really tough spring.
And now, do you see more alternative crops being used as meal?
Yes, I think what will happen is the sorghum milo will really take on a strong push if we lose soybean acres or winter wheat acres. I think the other thing goes back to what happens in the soft red wheat belt over in prime corn country. More of my clients are doubling their acres in Illinois, even of wheat right now, because the cash price is so strong and it works into their rotation so much better. And so this is one of these issues where it's going to be very hard to get an idea of where the acreage base is here in the United States early on this next winter, like in the winter months. I talked to another person about this, and I feel like that this is probably going to be the toughest acreage base configuration since the Freedom to Farm bill came out in 1996, because that really opened up a lot of possibilities on what you could plant. I think that's going to be the same thing this coming year.
And what are you seeing for beef producers, the ranchers and hog producers?
Yeah, I've been on the phone a lot with the livestock guys and gals lately with the feed side of the equation, and then also getting ready to ramp up the hedge. First quarter marketings for feeder cattle and fat cattle, especially fat cattle. I think what we've seen here recently is with these big placements and these big on feed numbers from USDA's cattle on feed report has pushed the feeder cattle down to a point where they probably made a low at this stage, unless COVID comes in and we go back into a global recession. I wouldn't say that for the fat cattle, though. They haven't probably tested the hardest lows that they could test. So I'm more eager to hedge the live cattle markets for the December, February, and April contracts, Luis. And I think we're right in the red zone right now as far as the rally that we're seeing is a fund short covering rally, because the funds were record short, net short in feeder cattle for managed money, and they were not very long in fat cattle either. So I think they're cleaning up here with this grain spread reversal, buying feeders back, selling corn back. Once that ends, I would want to take advantage of hedging because of the COVID and because of the election and because of the overall issue with consumption going into the first quarter. Fortunately, prices have come down some, and retail featuring is picking up, and that's given us some support. Live cattle prices here in this part of the country are trading around 106, 107. But I don't know if we can get much more than a couple, $3 more than that.
Yes, and I think the meat processors were the most affected industry because of COVID. Among the farm related producers. Do you think that 2021 will still be a year of COVID, very affected by COVID?
I am optimistic about the vaccine trials that we've seen in most of these, most of the pharmaceutical companies' reports and what the CDC's put out. I also know that the Trump administration has initiated the military to get the vaccines out immediately. In fact, one of his administration people last week went on record and said they are going ahead and making hundreds of millions of doses in anticipation of an FDA approval. And if they don't get that FDA approval, they'll scrap all that and throw it all away but they feel like it's worth it if they do get approval so they can get it out within days. I was surprised by that, but it's very needed. So I'm still optimistic as we get through the first quarter of 2021 that we'll have a vaccine and we'll be through the flu season.
Well, we are recording this will be the last program before we know who is the next president. So
Maybe,
yeah,
maybe.
the next president of the United States. So what do you think will happen if Biden wins, and what do you think will happen if Trump wins? Should I buy gold?
Yeah, I mean, if we have a contested election, I think gold and silver are good assets to have in hand. The dollar may become a safe haven asset now, but if we have a contested election, does the dollar go up or down? And that's the issue. That's the problem with this election. Nowhere in my lifetime or in the previous lifetime of my parents or grandparents have we had anything like this in the United States as a possibility. Sticking straight with the analysis and all the debates and what's been posted and leaving the politics aside, I do think Vice President Biden, if he won, would enact an energy policy that would be negative the crude oil market and the gasoline market. I also think that he would initiate a tax increase that would be targeted towards the wealthy and may create some negativity in the stock market. That goes against what I'm hearing up here, that the Wall Street banks and all the big Wall Street hedge funds are actually donating to his campaign. So I can't figure that one out because his tax policy, I would think, would hurt Wall Street, not help it. So those are the two things that I'm looking at right now that would be essentially negative for hard assets. I think that if he raises taxes, that would be a deflationary issue because you'd be pulling money out of the real economy and sending it to the government. President Trump has been very willing to spend, almost to the point where it scares you because of the debt load we're carrying here in this country. So he's been inflationary, and the dollar has generally tended to go down because of President Trump and his tweets and his policies.
Yes, I tell the viewer right now to be sure to read our disclaimers.
Yes.
And I ask you, Mike, to summarize again your marketing suggestion.
I'm getting more technical right now, Luis, as we see these headwinds with the macro side. If the dollar continues to go up and the crude oil continues to go down, the funds that have been long will probably go to the sidelines for a longer period of time. Let the charts play out, and then therefore don't jump into the long side too quickly. If you made some poor cash sales early in the year in corner beans, you can come back in relatively soon, just so you don't miss a change to the upside. But stick with known cost options, stick with known cost positions. I just got an email from my clearing firm that said because of the unprecedented volatility heading into this election, they do not want to have any margin calls on Monday before the election comes out, and they want margins cleaned up. And I expect all clearing firms are doing that all around the United States and the world right now. So be prepared for volatility that you've never seen before. Remember those negative crude oil prices that we saw. So keep everything known risk.
Well, let's see what happens. Thanks a lot, Mike.
Thanks, Luis, for having me.